Hey guys, in today's episode, we are going to look at how to do dividend stock investing. And I'm also going to show you 2 steps on how you can do it in a very simple and easy manner. But more importantly, I heard a few people in my office who were talking about dividend stocks, and this was the biggest mistake they were doing. Just look at this.
Bro, I'm तो going all in on ITC. Look at the dividends it's paying me.
तो भाई ग्रोथ कहाँ है? भाई डिविडेंड स्टॉक्स छोड़, ये गेम पूरा ग्रोथ स्टॉक्स का है. उधर ऑल इन जा, वही फ्यूचर है.
बट भाई लास्ट ईयर तो ग्रोथ स्टॉक्स ने भी ज्यादा रिटर्न भी नहीं दिया था.
Now let's fix all of these problems and let me show you how to actually do this. Let's go. Ishad, you also come. Okay, so let's break down dividend investing in a simple format. Now, the first thing that everyone needs to do when you're looking at dividend allocation is how much money do I actually put? If I have 100 rupees to invest in the entire universe, whether it's gold, stocks, everything, how much do I put in dividends and why do I have to put this in dividends? Number one. So I would say you can start today with at least 5 to 10% in dividend investing stocks. Right now, why do I say this? Because dividend stocks, which are high yielding dividend stocks, will usually give you a very good amount of passive income every single month. Now, today that passive income will be very low because you're going to invest a small amount of money. The dividends that come into your bank account are going to be less. But if you can build this trajectory over the next 30 years or even 20 years, by the time you retire at the age of 60 or 65, this becomes a very, very, very big corpus because both your dividend is also going to compound and the stock price might also compound at the same time, right? But before you even start this entire journey, first thing you need to do is get a second demat account, a separate demat account just for this.
But Shashank, why 2 separate demat accounts?
Okay, very good question. Let me explain. If you have all your stocks in one demat account, right, your long-term basket, short-term basket, it is going to be very confusing for you to understand what's going on. The purpose of dividend investing is separate. It's very different, right? What are we going to do here? We are going to choose a basket of dividend stocks, maybe 10 stocks or 15 stocks or even 20 stocks that are going to be in this basket, and every month you will do an SIP, and this will be in a completely separate demat account hived off from this. You will not even look at this, right? And every month what will happen over the course of 3 months, 6 months, 9 months and 12 months, you will get a beautiful dividend credit back into your bank account from here, and it becomes very easy to track all the dividend that comes in your bank account.
And what should I do with the dividends I get?
Okay, good question. So, a lot of people have 2 schools of thought. One is they take this dividend and they invest in the growth stocks, which is your long-term fundamental basket. But I think let's just go back into dividend investing. Now, if I have a second demat account, okay, it makes it easy for me to track all my dividends. Yes, I can track each and every dividend that has come out. Yes, after that, what I will do is I'll take that money and reinvest in some of these 20 stocks. Now, obviously, every month you cannot invest in all 20 stocks because the dividend that you get will only be 2% or 1% or maybe 5% of the entire value of these 20 stocks. But you can start buying a little bit of 1 stock, 2 stocks, 3 stocks, 4 stocks of all the other companies as well. Now, please note, obviously, this is something that can be sustained over a long period of time, and that is basically what we're looking at. So all the money that comes here will slowly start dripping back into this at that point. But yes, there is a very different angle, and I want to see if he can ask me that question.
Okay, my question is, the dividends I get, are these considered as long-term capital gains or short-term?
Super question. Okay, so this is not going to be long-term or this is not going to be short-term capital gains. Sadly, dividends today are taxed at your income tax slab. Okay, so there is going to be a slightly higher component for it, but I'll tell you how to offset that as well. Now think about this. Today you're investing a small amount, let's say 10,000 or 20,000 rupees every month. Let's say you're putting an SIP into that. The dividends that come into this won't even be equal to your tax bracket or won't even come under your tax bracket because the amount will be so small today. Right? The goal is not to pay tax today. The goal is to increase the dividend in such a way that your corpus becomes maybe 2 crores in the future, right? And you can get approximately 6 to 8% dividend yield on this 2 crores when you are, let's say, 25, 30 years of age. If you continue doing a 20k SIP, this 2 crores would even become 20 crores if you continue it and do a step up over time. That is the main goal. Now, when you're 60 and 65, all your other sources of income are cancelled. that is when this becomes your prime income tax source. And then paying income tax on this would be okay because you don't have any other dividend source or any other income source at that point. So this sustains you towards the end. So initially there is no cost of this, the tax is going to be very less, but over time this is going to become a sizable amount in your portfolio.
Okay, Shashank, all this is great, but how do I find those 20 stocks?
Okay, for that we need to step to my computer. Let's go. So let me show you how we can go deep into choosing the stocks and finding the exact number of stocks that are high dividend paying companies. Let's go. Now, when I'm putting all of these research reports together, there is one thing that I use for my analysis that saves me a lot of time, and that is a Quillbot Chrome extension. You should definitely check this out because once I've installed this works directly on my Google Docs when I am actually writing. So if I'm documenting my dividend analysis, when I'm making the script as well, and if anything sounds off, this grammar checker will automatically check everything and catch it instantly. Now, the paraphraser here is also super helpful because when I need to rework an entire paragraph, especially when explaining complicated financials, this tool helps me a lot. Now, my team also pointed out to me a new feature called the humanizer feature, which basically makes sure that our reports don't read like a robot or something like a chat GPT kind of an interface. It actually makes it into a human format, which is very, very interesting to look at. So this is really useful if you're creating any kind of professional document. It is a Chrome extension, so you can definitely go check it out. I'll drop the link below as well if you want to check it out as well. Now, the first thing what we're going to do is we are going to go and filter companies with respect to their dividend yield. Now, for all the people who don't know what dividend yield, let me just show it to you. Dividend yield is basically the dividend per share that is divided by the price per share. So let me give you a simple example. If I have 100 rupees as the price of share and the dividend I get is 10 rupees, then automatically my dividend yield is 10% because I've got 10 rupees back on an investment of 100 rupees. Now, if I go and put a simple screener over here, and let me show you what that screen is as well, and you can copy paste this. You don't have to think too much. I'm going to take everything and put it in the comment section below so you can copy paste this. Once you copy paste this, just filter it according to dividend yield and you will see some very interesting companies coming up in this frame. So let me go quickly into it one by one. Now, here we see a lot of companies coming from the government space, right? We have Coal India, we have ONGC, we have REC, we have National Aluminium, and we have some private companies here as well, which is Infosys, Oracle, HCL Tech, Hero MotoCorp, and all of that, right? Now, if you look at all of these companies, they're very high free cash flow companies, because if a company is giving you a lot of dividends, that means they have a lot of free cash flow that they can distribute back to the audience. But if you look at the government companies, they usually give the highest because the biggest promoter of these companies are the government itself. So that is why they make a lot of money and they take money back into the system like this. Now, if you look at the dividend yield, and this is how we will calculate, we see that Coal India has 6.82% dividend yield. Now, please note, this might have also been an anomaly. It could have also been that this year they gave a very high dividend and that's why the yield is high. That is why to check it out, you have to go deep into it and then go into their equity history and check out how much dividend they've given and is it increasing, decreasing, or pretty much the same. So if you look at the year 2025, as of now, they've given almost 15 rupees. Last year, they had given approximately 25 rupees. So last year they had given more. This year, I think it's around 5 rupees less. Before that, in 2023, they had given again 25 rupees. So pretty much they're giving every year 20 to 25 rupees as a fixed dividend coming from this stock, and the stock price is sitting at 388 rupees. But now the question is, Shashank, how do we optimize the buy so that we can, get both upside and downside potential? Because usually what happens is these companies don't go up a lot. And let me show you this, right? They usually give a lot of bonuses, they'll do buyback, they'll do splits, all of that. They will increase the equity base, but they usually don't go flying. Now, if you look at Coal India, and this is a interface that I'm showing you on TradingView, this is a weekly chart. You will see that over time from 2011 to 2025, the stock price has not gone anywhere, right? But the dividend would have increased significantly from 2011 to 2025 if you have held it for almost 15 years. Now, how do we optimize this? The best way to do it is to buy more when the market falls or when these companies actually fall, because most of these companies operate in a cycle. For example, they're commodity companies. This is Coal India. So coal has its own commodity cycle. So whenever you see this price coming to around 220 to 280, that would become your average buying price. Whenever it goes to around 400 to 520, that is when you should not get into this stock right now. So anything below 300 would be a very good attractive rate for you to get into it. Now, if I show you the second best company with respect to dividend yield as of today, that is a company called ONGC, Oil and Natural Gas. Now look at this. Since the launch in 2003, it has actually gone up, and then from that point, it has created a nice box over here. Look at this box, right? This is the box. So the maximum top we can see both times is around 350. So that means every time it goes to around 350, you should not buy. And every time it comes towards the lower end of this box, right, that is around 95, would be the best opportunity to take in. Because what happens is when you buy it at a price of 95 or 100, it usually goes up to 200 to 250, but the dividend still comes at the same rate, right? You're still getting, let's say, 15-20 rupees of dividend, and that becomes a very sizable amount for you. So if you had to see ONGC's dividend in 2024, they've given 4 plus 6 plus 2.5, which is almost 12.5 rupees. And now in this year, they've already given 6.25 rupees. This company also has a history of giving bonuses. So they did a bonus in 2011, they then again did a bonus in 2016, they did a bonus in 2006, and in 2019 they did a buyback of a lot of shares, giving more dividend to people as well. So this is something that you should definitely keep looking at. And again, they did a split in 2011 also, right? So these are ways I would maybe look at it, and these are ways I would actually optimize for it. So always make a pattern or a box in these dividend yield companies, and always try to buy at the lower end of the spectrum instead of buying at the higher end of the spectrum. Now coming back to this screen, so we have Coal India, ONGC. These are high dividend paying companies we know for a long time. REC is also another company. If you want me to show you, let me quickly show you. They are also a very, very, very interesting company. If you see this, in fact, REC now has gone up quite a bit. This was the box REC was trading in the past. If you see this box over here, beautiful box being created, and now it has gone quite significantly high. Now also please understand, these are old school companies like ONGC, Coal India, all, they're not renewable energy or they're not renewable fossil fuels. They're old companies that have been growing quite aggressive like this, and right now they have been growing into massive companies. But there are some new age companies that are coming up like NTPC Green, IREDA. All of these companies will eventually go and become a big dividend paying companies for the renewable space in the future, right? Now what I would do if I had to buy, let's say 10-20 companies, as I told you in the room before, I would usually have a mixture of a lot of companies. For example, Coal India, ONGC, REC would mainly be your government entities. Okay, not bad at all. I would add 2 to 3 to 4 private entities. For example, HCL gives a dividend yield of around 3.5 to 3.6%. Infosys gives around 3% and also goes up over time. HCL is that kind of a company that also gives 5-year growth rate, and they also give dividend yield which is quite good, and they give bonuses and all of that. Then I would like to take 2 to 3 banks. For example, here you can see Canara Bank gives a dividend yield of 3%, Bank of India gives 3.2%, Union Bank gives 3.4%. So already you can see my blended basket would come somewhere around 4 to 4.25 just on a dividend yield perspective, right? Then you can go down. There are more interesting companies. If you go further down the spectrum, you can see Hero MotoCorp, Infosys, even AMC companies, right? AMC companies are pure cash rich companies. And if you add some finance AMC companies and think about it from the next 10 to 15 years, then it starts ballooning into a very, very, very big amount, right? So this is what I would usually say when it comes to majorly investing in dividend stocks. But you can game this system very easily because, as you know, they always move in a parallel zone. They move in a variety of spaces, and that is where you can go and invest in these companies. Now, another thing that a lot of people can look at for the future are something known as REITs. Okay. Now, usually REITs used to never go up, right? They should never go up. They'll pretty much be in the same area. They always are stagnated. But what we are seeing because of some small change in taxation recently, we have started noticing that REITs are doing really well. Look at this. This is the Brookfield REIT. By the way, Brookfield is one of the largest data center REIT holder in the world, right? I don't know about the India REIT, but in the world spectrum, he's doing that. And they've recently broken all-time high. So if you look at it from a charting perspective as well, you can see that they have actually broken all-time high, and they are by design, they give a lot of dividends. By design, they give a lot of dividends. And it is not just one REIT, because a lot of companies in this space are becoming free cash flow players. And over time, they will continue to give a lot of dividends at that point, right? Now, the main game here is to hold these companies for 20-25 years, take the dividends that come, reinvest those dividends back into these businesses so that they keep blowing up in value over the next 20-25 years. Because in some companies like private companies and banks, you will get both both capital appreciation and dividend as well. So when you get both of that, it becomes a huge wealth driver or a wealth creator at that point. So that is basically how we look at it. So guys, this was the entire episode on dividend investing. Now if you want to know more about this, you can definitely check out. I'm going to put everything in the comment section below as well. And again, wishing you all a very happy Deepavali. I know this video would have come out much later than that, but I hope you guys enjoyed this. And this was a new style we tried, so I hope you guys like these styles as well. And if you want to look at more interesting stuff, you can also go check out my small cases that are there on the small case website. You can go and explore them whenever you want. Okay, awesome. This is me, Shashank Udupa, signing off, guys. Take care, and I'm going to go back to work.